Relaxed.
Starting the show right.
What up, bro? You see what
We're
happens?
live.
You,
We're live,
you
bro.
came back to the markets. Look how they greeted you today, bro.
Thanks for nothing, Chris.
Hey, it's not my fault, man.
You need to go on vacation, bro. You need to go back to Cancun.
Okay, so first of all, thank you 130 people for being here. I have a little story before we start the podcast. Now, Chris, you're not allowed to interrupt the story, okay? This is my version of events. You have a different version of events. You can say after my version of events. But during my version of events, you are not allowed to interrupt. All right. This is Monday morning. It's 4 a.m. Okay? I get a phone call from Chris. Okay, I get a phone call. It's 4 a.m. He wakes me up from my sleep. I'm like, Chris, what's up? He's like, bro. I was just like, this guy sounds crazy. I was like, yo, are you okay? He's like, I just did 5 lines of cocaine in Cancun. I'm like, what? Are you? I was like, are you okay, bro? He's like, I am high out of my mind. I'm like, okay. He's like, my wife's sleeping in the other room. She doesn't know I did it. She didn't know I'm doing it. I'm like, all right, fine. And he's like, also, I had 3 shots of tequila with each line. So that's about 15 shots of tequila on 5 lines of cocaine. I'm like, okay, he's about to say some crazy shit. He's like, I just got to tell you one thing. I was like, what do you got to tell me, Chris? It's like, I got to tell you one thing. We do this for 15 minutes. He keeps teasing this. I got to tell you one thing. I'm like, this motherfucker is high out of his goddamn mind in Cancun. I'm like, Chris, what do you have to tell me? He goes, buy Disney. And I hung up the phone immediately. I'm like, Chris, you woke me up at 4 a.m. just to tell me that you were high and you bought Disney. So that's what happened 5 days ago. And now Chris is back on the pod.
I don't think that was appropriate at all, but all right.
Yeah, dude, don't do that.
That is what happened, though, right?
100% all lies.
Not everything that happens in our lives has to be on the podcast, by the way.
Yeah,
But you know it's a joke, right? You know he didn't actually call me saying that.
That's
right?
not the point. That's not the point. Some people might believe it.
Yeah.
Who's
don't do that, because
If-
you don't know, man. One day my employer might watch this and they end up, I mean, I could get away with the Lizzo fat shaming comments now that she's come out as a
all
bad
right. Well, if you believe Chris
I
doing cocaine, I
definitely
hope
can't-
no one's believing that.
can't
Just
be doing
remember,
lines of coke.
just 3 of us don't actually live on YouTube. Okay. Well, maybe Chris.
Look,
a little
I
bit,
believe it,
but
yeah,
2
you
of
gotta
us don't actually live on YouTube.
Raul,
maybe
Raul
25,
believes.
maybe 25-year-old Chris would have actually done something like that, but I've never done coke. Like
Me
not
either.
once.
I've never
Yeah.
done it either. That's why it was.
It was
more
heroin.
of
Let's
a
get
joke.
this right. If we're gonna do this, let's get this right.
No
All right,
comment.
that joke fell flat. Pretty much like PayPal earnings. So
Oh man.
I guess we start off with that.
All right. I hope
Yeah.
you learned a lesson, Amit.
I do not think it was that serious, but it is what it is. What were your thoughts, Vitaly, on PayPal?
I didn't get all the earnings, so maybe Chris heard the whole thing. I heard something about total payment volume being down a bit. So maybe Chris takes this one over, but it doesn't change any of my thesis for 2025 is what I'm betting on, not this quarter.
No, I mean, I didn't catch all of it. I just quickly glanced over the earnings presentation. The biggest like probably red line that I saw was just a negative free cash flow report, basically from the sale of their BNPL loans. So on a quarterly basis, that was negative. So this is like first time they've had negative free cash flow in like a long time, but it's more of just accounting rather than actual figures. Overall, the numbers were good. The other thing is growth is slowing down significantly, which could be a headwind, because anytime you have a tech company who was previously a heavy grower end up slowing down, it tends to look poorly. On a positive note, they did guide for higher levels of share buybacks, and also the GAAP income was pretty good that they guided for. So the business overall is very healthy. There are some headwinds around, I guess, the Fed pay now, which is probably distracting a lot of people. So, I can't say, yeah, PayPal slight miss on operating margins. Yeah, that could have been
I do have a criticism. We expected Lizzo and got Roseanne Barr.
I don't think we even expected. We didn't.
I bet you
to be
no one knows
honest,
who Roseanne Barr is at this point.
No, we know her.
know Roseanne.
She's the one who said the racist joke 2 years ago and got canceled really badly.
Yeah,
Or
okay.
supposedly racist joke.
Who
or
is
whatever
Roseanne
it
Barr
was.
besides that?
She has a
You
show
tell me.
called Roseanne on Nick at Night, or at least that's where I
On
used to
Nick
watch
and Night.
That's where I used to watch it.
Well, I don't know. Oh, my God.
It was in the 90s, though. I know it was in the 90s.
Right. Yeah. Okay. That's close. That's good.
If you want, this article on Yahoo Finance summarizes it pretty well. PayPal Holdings shares fell 7% in extended trading on Wednesday as investors was disappointed by the payment firm's quarterly operating margin, even as executives said they expect improvement towards the end of the year. Underwhelming margins at PayPal have been worrying analysts in recent quarters. The company's low-margin business products have grown strongly, while growth in its branded products has slowed due to increased pressure from competitors like Apple. PayPal's adjusted operating margin for the quarter came in at 21%, missing forecast of 22%. In a bright spot, the CEO said that as inflation cools, the company expects discretionary spending to rebound and e-commerce growth. Some of the headwinds we face, whatever. PayPal's total volume surged 11% in the second quarter to $376 billion, benefiting from resilient customer spending trends. PayPal forecasted adjusted profits per share for the current quarter to be in the range of 122 to 124, above analyst estimates. Posted revenue of $7.3 billion compared to $6.8. It earned $1.16 per share. Yeah, so it seems like unless you, first of all, they didn't say AI. That was probably the first thing.
That's the problem.
They didn't say AI, and you have to have a really big beat. It was like, wasn't it Tom Lee that said people are actually now skeptical of good earnings, that they're now actually worried about good earnings. So we get like good jobs reports, or you get good CPI numbers. The fear is that the Fed's now going to just jump in and get that final 25 basis points raise. What is that now? 60. Damn, that is a hit.
I don't know if that's too bad. Look over the last 6 months.
74 to 66. What is it? 73 now.
Yeah, not that bad.
58 was the low. Look, the thing about PayPal is they came
low
in
on it.
line with EPS and revenue. They did fine, but monthly active users did decline by 2 million on their side, and the transaction revenues fell flat. I don't know if this response was warranted on PayPal. I think today's day, and we'll talk a little bit about the macro with the Fitch credit rating stuff, was pretty bad of a day to report on. But I don't know if the actual company is worth 10% decline after hours.
And I think Kendall said that CEO said AI 11 times. And if you don't say it at least 20, we know what happens now.
Yeah, someone was saying that AMD was like 68 times
Yeah.
on the call. They needed one more, and they would have been fine.
Yep, exactly.
Chris, do you see any overall weakening in the narrative of PayPal, given the buybacks is definitely positive for shareholders, or is there something else to be concerned about?
No,
Or
it's just the
nothing to be
Fed
concerned
now.
about?
I think the Fed now thing is an overhang until people really know what the effects are, right? So some people might be discounting that as a future future headwind. So because of that, maybe some people are like, you know what, maybe payment processing for PayPal is going to be flat or negative going forward because banks will be able to use Fed now to do transaction fee-less processing. But I don't think that's the case. I think PayPal is a juggernaut in its own right. It's got connections all over the place. It's got growth internationally that's outpacing a lot of other products. So I think the market may be a little bit oversaturated with payment processors right now, and some may have to fold in order for PayPal to really succeed. But that's something to be seen. I still think PayPal is a pretty decent investment going into 2024 and a possible recovery. They're still operating very well, and any of the earnings that they're literally using it to buy back shares. So as shareholders, whenever you see the price of a stock like this go down, just remember the next quarter when they do more share buybacks, they're doing it at a bigger discount, and you're getting that bigger discount as a shareholder. So it's all value accretive at the end of the day. It's just the question now is going to be how much growth can we expect in the future? And it seems like right now the growth story for PayPal may be a little bit more muted than what was anticipated in the past.
Well,
Yeah, but at a forward 14 now or 13 now, that they don't have to show much growth in order for it to just return, like we keep talking about, to the mean. So in PayPal's case, it's just a play on the double, at least for me. This is my one trade going into 2024.
Have they made have they given any clarity on exactly how the FedNow stuff would be implemented? Is it going to be its own standalone app, or will it only be integrated into current
between banks
apps of banks? Right. So then, but like, is FedNow going to be on eBay? Are you going to have that in the same?
No, it's between banks.
So then, yeah, I don't see. I mean, I could see how there might be some concern over that, but unless it's like a standalone app that can compete directly with the likes of like Venmo and PayPal, then I can't see how.
So the thing is, it just depends on how they integrate the UI, and
that's
like
what I'm looking for now, and I can find almost nothing on it.
Yeah,
But
there
not
isn't
UI.
there isn't any independent UI. Each bank is going to have to create their own UI that links to the FedNow
So it's like
system.
an API,
So it's
more like a UI.
yes,
Got it.
yeah. So basically, right now, like let's say I have a bank with SoFi, and you have a bank with JP Morgan Chase. Before, the payment processing realm, I'd have to send you money, and then the payment processing network would do its thing, and then eventually 3 days later you would get your funds. So the two banks weren't exactly like linked. FedNow will actually now sit between the two and be able to do instant payments. So if I send you $20 within 15 seconds, there's already a handshake happening between my bank and FedNow and your bank and FedNow, and you'll have that money credited to your account
Can you
in
bring that
near
up a
real
bit
time.
while Chris is
Yeah,
talking?
yeah.
I think the
So
only one's going to suffer from Fed now is Zelle. And in fact, just as a side story, I used Zelle today. In
I'd
fact,
really like
Carlos,
Zelle, actually.
well, I don't. I tried to pay our partner, some cash from the property,
Yeah.
and immediately I was put into timeout because I paid him a minimum of $400, and I was put into timeout. A new account. They want to see. They put me in a 24-hour timeout where I can't send them any more cash. Okay,
Yeah.
that's great. Then I tried to send another payment because that did go through after a couple of hours, and it said, "Oh, that's it. No more for you today. Come back tomorrow."
Isn't the limit
So,
2,500 a day?
No,
well,
the
I
limit is
had
3,500 a day.
right, but I have other bills and payments to make. So my point is that they shut you down if you do have and this always happens to me because I deal with a lot of contractors too. I always get shut out, and as soon as I hit that whatever limit they have per person or per day, I hit it, and that's it. So then I have to go to another service immediately, and that usually is Venmo or PayPal, but usually Venmo.
Yeah, which I'm not a fan of. I pay all my contract is that way, and like I paid like the nanny, I do it that way. And the
Zelle
first
or
time I
Venmo?
did Zelle, and it was annoying that first time. I had to send I had to send $1 just to make sure she got it. And when she got it, then you have to continue to do that. Then you're in a 24-hour
I'll
period.
Fed
But after
now.
that, it's fine. And after that, it was fine. I do understand that there's some.
It depends how many payments you do. I do a lot of different payments, especially to contractors and people, and we're going to start more payments going forward. So it's really annoying, honestly. Like for me
But look,
to
I'll tell you
participate
what the
in it.
flip side is. I'll tell you what the flip side is. When the pandemic first happened, there was a lot of robberies in my neighborhood. And what people would do, some people actually leave their car doors open in my neighborhood, right? And so there was a guy, we know who he is. This guy would go around to people's cars and open the door. He opened a car door and was able to steal the cell phone of a daughter of one of the neighbors that we know. And he immediately tried to Zelle himself. She had like $4,000 in the
Well,
bank.
that means she has no password on the phone.
I don't know. Look, I don't know how he got in, but I know that he got into her phone and was trying to Zelle himself the money, and he was only limited to whatever, I don't know, $400 or whatever it was, and then it blocked him because it was like a new account, and then he wasn't able to actually get any money. So for the 99% of us, this is like everyone taking their shoes off at the airport to stop the one person that's actually got a bomb. It's annoying, but you understand why they have those protections.
Yes, but after I said I'm sending a certain amount, they text you a code, assuming
Yeah.
you didn't lose your phone. I agreed. I texted the code back. Immediately, they put me in timeout.
What do you mean? Like they wouldn't let you send any more money?
Well, first they put me in a timeout saying this is a new person you added. You
Yeah.
can't send any money for 24 hours. So we have to manually look at this transaction. That's what it
Yeah.
actually said in the bank. Okay.
Yeah.
Great. You have to manually check this transaction. A couple of hours though did pass. That transaction did go through. I got an alert. Then I'm like, okay, let me send the rest of it now. And boom, stopped again.
And what was the reasoning that second
Well,
time?
the reasoning because I hit some limit. I don't know because I sent other payments to
They're like, are you trying to
contractors.
send this money to a Spanish guy in LA?
Yeah, basically, I couldn't even send it to you. My point is like it's for anyone doing a lot of transactions. If you're only doing a couple of transactions, I see it's not
Yeah.
an issue. But if you're
Yeah.
doing some real transactions, you can't use it. It's unusable.
I mean, it's funny.
And by the way, so that's a FedNow competitor. That's what I'm saying because that's a
we
bank
have to
thing that
see-
happens.
You have to see what the protections are in place with FedNow. Like none of us have actually used it. Like Venmo is great for certain things, but it's also got these weird holding periods where they're making money off it, and that in itself is also annoying.
They have
It's
their own
also-
problems.
It's also a lot easier for me at the end of the year to get a report from Zelle than it is from Venmo in terms of the people that I paid. So
Vitaly, those people that you're zelling, do they have like Bank of America or a major bank behind them?
They
Or
usually
are
have a
they
major bank. Yeah.
Oh, because then it should be easier.
It,
That's
right,
so
it
weird.
does.
It-
Actually, it does work easier if it's Bank of America to Bank of America. If
It's
you
easier.
like-
Look, once again, I have PayPal, but this is not why. I've just been using Venmo. Like it's easy when someone comes to you, they show you their QR code.
Mhm.
Like I just had cleaners today. She just sends me her QR code and I just
Yeah.
pay that way. That's
Yeah,
it.
it's super easy.
Like that's what it should be. Even Zelle should make that easy. Even if they have it, they don't make it easy. Like this should just be so simple. Why do we have a worse payment system than China? It's kind of crazy.
Well, you know that that little holding period, they're making money on your money.
Oh, they're all making money on us.
And
that's for sure.
and Venmo will
Starbucks
charge
is making
you,
money on us by holding our money.
Yeah. Was
Yeah.
it Starbucks?
I'm saying all these, all those apps that you pay
Oh yeah,
$20 for coffee.
Yeah, when you when you buy the
they're
gift
holding
card,
that money
sure.
and they're
Yeah,
using it for
sure.
whatever.
And, they expect, and how many of those get destroyed and never used? But the other thing too is,
Well, that's
if they have a 3-day holding period, then they can charge you 1% for the instant transfer. They do that to me on Venmo.
They
all
do
the
that
time.
too.
If you want it right now, or like Bill.com, same thing. That's how I get paid for most of my clients. I still have to wait 3 days.
that's like one of the biggest grips when it comes to gift cards. Like I know a lot of people like swear by gift cards, like, oh, I'll just get everyone gift cards. But the thing is that money's just pretty much sitting in a account that's backed by a little card. But
Yeah.
most of the time that money is in the account holder. So like whether you go to Walmart, you go to Target, and it's a great source of revenue for them because not everyone is going to use those gift cards all the time. And not to mention those gift cards over time, it's just money that's pretty much sitting there. So it's kind of curious. Like I still have a few Bed Bath and Beyond gift cards that I'm never going to like. I don't know where they are. Like I got them as a present when I got married, but I never used them. I put them in a wallet. My wife, I probably has some like Victoria's Secret ones, and that's just pretty much free money.
Wait, you have Victoria's Secret? you own a bunch of Victoria's Secret gift cards?
No. I know.
Can you do a poll? Can you do a poll of what people use? I'm just curious. At least for the finance people in this stream, it's not the majority of people. But is it Venmo? Is it Zelle? Is it what's the other one? Cash App.
Yeah, Venmo, Zelle,
besides
Cash
PayPal.
App, PayPal.
When I say do Venmo, PayPal as one. That's like sort of one thing because that's the same company. Venmo / PayPal, Cash App, Zelle, and what's another major?
Is
that it?
I think so.
Is there anything else in the U.S. that's big? I mean, there's got to be something else, right?
Isn't enough?
That's kind of crazy. It's 3 players. If I can't think of a fourth,
you know what I'm saying?
I mean, that should be a little bit more of a bull case for PayPal too. Let me do these super chats real quick. Then I want to move on to the Fitch stuff today. Richie, the slogan of payment processors: if it ain't stick, it ain't staying around. That's fair. That makes a lot of sense. Thank you, Richie, for the $5 super chat. David for $27. Thank you for this. If there was a very low budget Weird Al Yankovic biography movie, who has what it takes to play the role of Weird Al Yankovic?
I'm the only Jew here. This makes no sense.
I mean, I'm sorry. No, it's clearly a myth. The hair.
Dude, what's
the hair? Listen, the hair.
The Indian
and the
Weird
voice,
Al.
The hair and the voice. What's funny is I know a guy who knows him very well. Like a producer that I work with is like really good friends with him, and so I don't know. It's weird even talking about it because I know that guy and he's super fucking funny. And Mitt's not funny, even though he looks very much like him.
Oh.
Okay, I am funny, but I'm
Western
funny
Union.
on impromptu humor, not time. The first time I try to script a joke, it falls flat. But
honestly,
impromptu, I'm better.
No, you're a good speaker, but you ain't funny, buddy.
No, I'm definitely funny. I'm not scripted.
What's with the other guy thing that's going on, Carlos? Why does everyone keep going with the other guy?
No, that's just David. He just called.
It's just him. It's just
this is like a couple of people that I heard say that, like, oh, the other guy.
I guess
I guess Carlos.
It's like picking up. They're trying to make it a thing, I guess.
Yeah. By the way, Weird Al, there is a movie that what are they called? Roku made. Roku made a Weird Al movie. So if anyone hasn't seen it, it's kind of good. It's a very weird movie.
Yeah, he's a weird dude.
Well, it was actually not a biography movie, even though it's a fake biographical movie.
One of those mockumentaries.
Totally mockumentary, absolutely.
All right, let's move on to the Fitch stuff. Or what were you gonna say, Carlos?
No, I was gonna say he's asking if he's funny. That's a weird one to explain.
And Kelly says it's not funny, but he does look funny. Just want to point that out.
Kind of funny.
All right. Fitch. So Abercrombie and Fitch, they came out today. They said, look, we are you guys are smiling a little bit. Chris, can you explain this whole Fitch thing? Just take
Can we talk about what I said we should talk about at least for 10 minutes? And then you can talk about Abercrombie and Fitch.
What did you I think that's a longer discussion. That's not a 10-minute discussion.
Right,
that's probably 25. Let's do Fitch for 10 minutes. It's a good thing, so we'll get to that after. All right, Chris, what is going on with the macro with this Fitch credit rating decline? And do you think it has an impact or is it a nothing burger?
I mean, clearly it has an impact on sentiment. I don't know if actual, like, real dollar terms, if it's going to have any real impact, but this is not good. out of the three major rating agencies, two of them now have us listed other than AAA credit. The only one that hasn't downgraded us is Moody's, which probably could be next if we're not careful with how we're actually like running the country. I mean, we've been running these fiscal deficits for a long time. You know, the government's kind of like dysfunction, has dysfunction all over the place. So yeah, I mean, I think the US definitely deserves it. We're an economic powerhouse, but so was Rome at one point, and then eventually they, you know, bankrupted themselves over a course of a millennia. We're doing it at a much faster pace, of course. So I don't know. It's just something to keep in mind. This should be a warning shot to all politicians. Like, y'all need to stop playing games with the economy, using it as a volleyball to basically go back and forth on, like, literally Fitch downgrades us, and like 2 seconds later it's the Democrats' fault, it's the Republicans' fault. Oh, Trump did it, no, Biden did it. Like, instead of trying to fucking play the blame game, why don't y'all try to fix it? And not to mention, this was a problem that pre-existed way before Trump and Biden. Even Fitch said it. Like, this is an ongoing problem for the last 20 fucking years, where you guys are spending more money than you have. You're creating all sorts of conflicts around the world. You can't agree on even the most basic parts of how to run a country, government, and now your finances. What do you think is going to happen? I'd say if we have a AAA credit rating from Moody's for another year, we should be grateful. I think if we don't change course in how this country is going, we're looking at you know, the end game for us as a superpower, and us just becoming another country.
The official explanation was, I'm reading it off the site. It says, explaining the rationale for the downgrade, it pointed to the expected fiscal deterioration over the next 3 years and a high and growing general government debt burden, and the erosion of governance related to AA and AAA rated peers over the last 2 decades that has manifested in repeated debt limit standoffs and last minute resolutions. Fitch said that the decision wasn't prompted by the last debt ceiling standoff, but rather a steady deterioration in standards of governance over the last 20 years regarding fiscal and debt matters. And that goes to your point, that it's both parties are responsible for this. You just can't. I mean, what's funny is the government does not practice the same fiscal responsibility that they tell the population to do, right? They, in general, don't want you. They tell you pay your bills on time, don't spend more than you make. And our politicians don't do that. They're just not fiscally, they're not incentivized to do so. I'm reminded of that short that we saw, Warren Buffett, where he said, I can fix the debt in 5 minutes. You say that basically every year that we're not balanced, every sitting member of Congress gets voted out. We'll have a balanced budget every single year. And that's what it is. They're not incentivized to.
I mean, did you guys see that the average age of Congress right now? It's like fucking in the 70s, dude. Like, you got people who have, like, Dianne Feinstein in the Senate barely knows what the fuck is going on, right? Our president barely knows what's going on. There's so many people in Congress that are like way past their prime in trying to determine things that should be relevant to us. And yet, I mean, you guys saw that guy, Hank Johnson. Motherfucker doesn't know that I still can't believe this dude said an island was going to tip over.
Oh,
bro.
I know that.
Like,
So let me take
this isn't who's in charge, bro.
Let me take the opposite side, because I think all of you are causing a lot of doom and gloom on this credit rating. This to me was a nothing burger, not in the context of the effect that had on stocks. Obviously, that was bad, but this was the dumbest decline that I've seen in a very long time. The last time we got a decline was 2011. And the reason we got that decline is because the debt ceiling negotiations between the Speaker of the House, John Boehner, and Obama were so bad that the negotiation we got in 2011, 3 years after the Great Recession, was a committee to come up with a better negotiation. That was the deal they reached. That's why the credit rating declined and the S&P fell 15%. Whatever you want to say about Biden and Kevin McCarthy, they negotiated within 5 months. We got a deal that was bipartisan, and it is reducing the deficit by $1 trillion. So the deal was really good. But I get that the debt to GDP ratio is horrible, 100%, 118 to 100. It's a horrible ratio. But at the end of the day, this decline makes no sense. The U.S. is not going to default on its debt, and to put it out right now, it was kind of stupid. It doesn't seem like it's.
They're saying this is after 20 years, after 20 years of sort of bad fiscal policy. And if you look at, we're 32 trillion in debt. I remember before 9/11, like when I was first starting to get into investing, I think the total debt was 1 trillion. I could be wrong. I think it was 1 trillion. So we've gone up 30-fold, and whatever, eight or 10 of it was just in the last couple of years. I agree with you that it's more a statement. It's more a statement than it is actually going to affect the U.S. in any way. But it is a sign of like you can't do this forever. So even if you disagree with the credit rating, you have to at least accept the premise that this can't go on forever. We can't just keep kicking the can down the line.
I
Right?
agree with that. I agree with that.
The interest payments on this alone is like over $1 trillion.
I still think this can go on for a very, very long time
I also agree with that.
without any problem.
I also agree with that.
And it's been going on for a very, very long time. So I think we'll be dead before this is an actual issue for this country.
But if you look at
And I'll tell you when it's going to be an issue. When the actual military might of the country starts to falter, that's when it's a problem.
Correct.
I can tell you right now, that's happening right before our eyes. Don't even.
Okay, happening
not
next
even
year, guys. You heard it here first.
No, I could tell you, no. Even our readiness in terms of military is eroding rapidly.
Just because we don't have enough bullets for
Just because
Ukraine.
you think the military is being a
Obama
little bit
ran
more
out of
woke.
bombs.
No,
Just because we don't have enough
No,
bullets for Ukraine.
no,
now.
that's not it. We have one of the areas we have a recruitment crisis too in the military. Right now, you can't get people to sign up. We've been running recruitment deficits. The military is completely demoralized. We couldn't even beat back a bunch of cave dwellers in Afghanistan. Just think about that. They fucking beat us. A bunch of people fucking living in caves, fighting a guerrilla style war. And what the world is supposed to be afraid of us?
Hold
Think
on. This
about it for
happened.
2
This happened
seconds.
also with the Vietnam War. It's the same thing. When you don't have the right conviction, those people are defending their livelihoods, even if they're wrong, in our opinion. They're defending their lives and their livelihoods. We're just there to fucking get oil. Like, there's a difference of conviction. If actual conviction comes to it, like World War II, where we are in trouble, we all come together and we fuck them up. All right. And that'll happen again if we get to a point to do something like that. But that is not happening right now.
Winning battles is easy. Winning wars is hard, dude.
Yeah,
and that's the thing. The U.S.
That's
is
right.
not in a yeah.
No, I agree with you there. Absolutely.
But there were, at least from what I've read from like the Vietnam War.
Palantir fixes this.
Well, no, I am actually going to get to that. There is a real difference between what they tell, and you could speak to this, Chris, probably. There's a difference between what they tell the soldiers that are on the front lines are doing, and then what they actually find out is happening once they get on the ground. And to your point about when you're fighting in another country, in a country's home turf, they know the terrain, they know the land way better than you could. Satellite images don't give you a real sense for what the actual topography is, and it becomes a major disadvantage when you're trying to invade another country. The other side of this is you talked about Palantir, but I do think that deficit that you're talking about, Chris, is going to be made up with AI. I feel like you're going to see much more miniaturized drone AI style weapons that will get rid of the deficit. I don't think they actually want to put people out there. They'd rather have somebody sitting in Washington flying a drone. You know what I mean? Have a bunch of like video game Call of Duty nerds, putting them in charge of a couple of drones and do drone strikes, or actual like little like helicopter based drones for those types of attacks in the future. That's
let me address something really quickly that Josh said. Chris is bashing soldiers who fought in Afghanistan. Really, bro, I was one of them. Okay. We didn't fail in terms of actual fighting. We failed in terms of policy. All right. Long before Afghanistan could have been won by any measure, the Afghanis used to have this saying, basically, the Americans, you guys, all you do is watch your time, and all we can do is literally watch you, because eventually we're gonna win anyway. They had that mentality. We never had this real policy around how we're actually going to win that whole region. And unfortunately, it's one of those things that I think was driven more by terrible policy and how we portrayed ourselves in the media and everything else. And then eventually we just let the criticisms around our presence even deter us from so many things that we could have done. I think the failure of Afghanistan and Iraq is highly, it's really disappointing, because we actually were doing a lot of good there. Okay. We did a lot of good, but at the same time, we allied ourselves like with fucking warlords that used to fucking rape children. Like, these are the kinds of things that you guys don't want to like acknowledge. We used to burn fucking people's poppy fields who were just making a livelihood that way. We used to offer people jobs, but at the same time,
I just want to point out this has been going on for a long time.
Yeah.
I know you're saying like it's new, but didn't we fund Afghanistan, all those guys back in the 70s and 80s? Didn't we fund Bin Laden and
yeah.
all those people?
Oh yeah,
So
they installed Saddam Hussein.
yeah, I mean, like you're bringing up
No,
like
no,
it's like this
no.
is a new thing.
Let me explain. The difference is that when we went in, we had a chance to actually make a positive impact and make an actual difference to these people. We didn't end up doing that. We ended up literally
We
letting the
don't
military.
care about that shit. We came for the oil, dude.
Bro,
Are you serious?
you could say that about Iraq, but Afghanistan was a whole different story, dude.
Yeah.
Afghanistan.
Okay, if that was the same story, why did we stay 10 years and not really do anything?
What do you mean?
It's military presence.
I'm saying they were just there.
I'm trying to bring up a graphic. I don't think you haven't okay. I don't think you understand how many military bases the United States has around the world. When you want to talk about like the fall of the Roman Empire, it's expanding the empire too big. I mean, and even when we talk about climate change and climate emissions, U.S. has 15% of the world's climate emissions, and like 80% of that is the CIA. Like literally just the CIA, flying planes and moving materials and bodies all around the world. It's like. It's a massive. It's probably the biggest, largest corporation in the entire world.
Let me tell you that the only people that won in Afghanistan and Iraq we're not even those people. The people that won were the military industrial complex. Just like Carlos saying, do you know how much money they used to fucking charge to fly in stuff to Afghanistan to these private contractors? Bro, the military guys didn't make. I mean, we made good money. I'll be honest. Like the Army, if you were Army, you got BH, you got hazard pay, you got all this extra shit. That was great. But at the same time, if you look at how much the contractors were making, bro,
pull this up while he's talking. Look at this.
Yeah.
And this I can't find the infographic, but like this is why they were in Afghanistan and that part of the world.
Going back to debt, Chris. So do you really think the Fitch thing matters long term, or do you think the debt is that serious in the military stuff that this could hit a tipping point in our lifetimes?
I think it could hit a tipping point in our lifetime. I mean, as optimist as I want to be about this whole situation, not every empire lasts forever. There's always going to be challenges that come around. The U.S. has in the past been a lot better at dealing with the challenges than what we're facing today. That's all.
So, okay, let me just follow this thread I think we should move on, but okay, the two superpowers that can compete with us, quote unquote, Russia, we know that's not happening. They're basically bankrupt. They've been bankrupt for like 30 years. Okay. So I don't know how they're going to compete. Besides causing problems and possibly going to war, they're going to lose at the end of the day. That's what's going to happen. And I'm Russian, by the way. So that's my people. All right.
He's like, I went either way.
I went either way. I live here.
I just go back home.
And number two, China. And China's in a real clusterfuck right now, too. Their technology thing is completely screwed. They've taken out all the money. Have you seen that chart which shows the amount of investments by VCs and everything in China now? It's like at the lowest of the low. Could be the bottom.
So what you're saying? Is it's okay to be the best of the worst? Is that what you're saying?
Yeah, basically, I'm getting to that. Yeah. But thank you for skipping ahead. Besides that, their whole real estate in this complex is collapsing because they've invested too much in building houses that nobody lives in. They have a terrible economy on the verge of who the fuck knows? They print their own money, so maybe bankruptcy, maybe not. Maybe they print their way out of it, just like the U.S. But they are in way worse shape than we are. Europe is in worse shape than we are. Russia is 100% in worse shape than we are. So we're failing, and who's taking over? That's the question. Someone has to come in and take over. It's not just a zero.
No.
Actually, in this case, it is a zero-sum game.
But I don't think he's saying.
United States. At this point, there is no second in place besides China, and they're so far behind. It's crazy. And
so yes, no, I'm not saying that the U.S. I'm not saying that there needs to be even a number two. I'm saying that the U.S., which has provided this stability for the last 70 years to the world by being that superpower that literally keeps everything in check. If we fail, the rest of the world will end up what it was like back in the ages of where, you had multiple countries always fighting each other and all this other shit. The US has been that strong stabilizing force around the world. And as we take a step back, I'm not saying that the Chinese, the Russians, or anyone else is going to step up, but the whole world is going to be in a much more unstabilized place. That's all. The U.S. has provided the stability for the rest of the world. If we fail, stability tends to go down. That's not good for the rest of the world anyway. So I'm not. All I'm saying is American exceptionalism is a great concept, but it's something that we have to keep working at. We can't just give it up. And especially our fucking politicians needs to be held a lot more accountable with some of the shit that they do and say and whatever.
Well, I agree with you. I agree with you that's why we should be buying Disney calls right now. 100%.
Oh, that's why you should be buying pounds. What do you mean?
Actually,
Chris,
no,
you're saying like how
no,
sharp right
no,
now.
I agree with everything.
Alice, you bring up a great point because what America is great at is exporting everything, our technology, our media. We have the country where these things are possible. Like I talked to some, it wasn't in Discord, I forgot where I was talking, but I was like, oh no, it's actually in real life. Finally, in real life, there was a conversation. I was like,
This from the guy who says, I don't live on YouTube. You're on the internet.
I don't
bro.
even know what's
Hey,
going
what
on
are you
anymore.
talking about?
Who's real? Okay. But I'm like, okay, where is the Google of France or Russia? Like, I know China has their own little closed system. That's because they don't let American companies. My point is the Amazon, the Google, the Facebook, these companies are American companies that have taken over. And there is no second place to even close to these companies. It's because America is great at allowing these things to exist and flourish.
Right, but
No other country can
that's
do
why I
that at
think
the
the credit
same
rating
scale.
thing is kind of
the
bullshit.
two
That's why I
questions.
think
What's
it
the
is.
No, but this leads back to Disney. Once again, Disney is an American-made company that can grow this big, that can keep going up. It's not the Disney of France, whatever that is. I don't even know what that is.
I
you
agree.
have to admit it. No, but my question is, but what is the
See, that comment was funny.
what is like what argument are you countering with that statement?
The
Like,
argument he's countering is the
no
debt,
one's doubting that, but no one's
Chris's point is the debt ceiling is going to hit a tipping point. Vitaly's like, it will never hit it, or at least in our lifetime.
I'll be dead before that hits a tipping point. That's my argument.
Okay, I don't know.
And I mean, logically, I tend to
I'm not
agree with
saying we
Vitaly
shouldn't
on
worry
that as
about
well.
making America better. I'm not saying that. And Chris is right about a lot of these things.
But
the
what
fact that we are at the edge of some cliff and we're about to go over lunacy.
What you're assuming is that everything's great, and then one day everyone's.
I'm not saying everything's great.
What I'm getting to a point.
I'm saying everything else is shit, and we're sort of
I'm
like
not,
the middle of the road.
I want to actually make my point. My point is, it's not what you're saying is like everything's going to be great for a while, and then one day the Band-Aid gets ripped off. But it's not like that. The erosion of an empire does not happen like overnight. It happens slowly over time. Like right now, they can't raise taxes. Right? If they even talked about raising taxes, it would drive people crazy. So what do? You just let inflation is a tax. And so your taxes are being raised and you are losing money. And if this happens over say even 10 more years, at every generation, it gets worse and worse for the generation next to them.
But Carlos, Vitaly is saying there is no superpower to take over the United States because he had some analysis on Russia and China are also going to shit.
I'm not saying that it's not getting worse.
No, but what that means is that other countries at least could say have us to back them up. Like when there's issues.
No, but that's the point. If even if we're going to shit, if there is no alternative, we will consistently back up the other currencies, the other countries. And that's his point.
And my point is that makes us having no fail safe. We have no plan B.
Correct. That's true.
Right.
That's true.
So what that means
there is no plan B.
What that means is that we have to be extra responsible because not only do we not have a plan B, okay, but if we show any weakness, all the people that are standing on the sidelines will pounce. This is exactly what happens to lions. You see lions are the king of the jungle forever. They live like kings forever. Then the one day that they get challenged by someone, the younger lion, that's basically the end. They reign forever until one day they just don't. And that's how it happens with these big superpowers.
Okay. All right, guys. America's going down.
Vitaly's discussion. So Vitaly, you can intro it that you want to talk about.
Yeah. So besides this, I actually don't like political. I don't like political junkies at all. So I guess I was texting in the chat with these guys, and I'm like, so what do you do when the world is going to shit in terms of the stock market? That's all we really care about here. And so I wanted to discuss what you guys do. So your stocks are falling. Everything you believe in is crumbling right in front of you. Let's go around the sort of this table or this four gentlemen and find out what each of us does when the world is crumbling around us and the market is red. What do you do? Amit, starting with you.
I don't know. We'll start off with someone else for someone more intellectual. Chris, what do you do when the market's red?
I just look at the companies that I've been interested in the last 2, 3, 4 years that like how their business is evolving and how they're dealing with some of the economic challenges and what their current stock prices, because that could present a big opportunity. Like, for example, Disney. Like Disney, for the most part, has been a very successful company for the last 100 years. They've done exceptionally well, but now they're transitioning from one type of business to another.
Okay, this is not a Disney D&D. It's more just
okay, yeah, all right. I get it. All right, I'll finish real quickly.
Can we do
I just look for opportunities.
Right.
Yeah. I look for opportunities where in the past I may not have actually had one. So if I see something that I really liked, but I thought was overvalued, and now I can get it at a discount, I'll buy it at a discount.
So actually,
So
that's a
wait,
good question,
hold
Chris.
on.
Hold on, I did
I
want
have
to
the
follow
same
up with
question. I
Chris.
think I have the same question as you. Go ahead.
I wanted to follow. So, okay, so you look obviously the companies you're tracking, but what about your current portfolio? You're like, do you actually analyze that and take a look? Maybe I don't need this. Sell out of positions that you're not so
That's what I was
confident
going to ask.
in.
Would you sell out? Yeah.
So I'm just curious. Do you go over the whole thing, or you're just looking at like, what do I pick up, basically, as opposed to what do I sell out of?
Well, the thing is, I've been high classing my portfolio, so I'm not necessarily that worried about this going down. You know, I tend to I tend to pivot before things hit things hit the fan rather than until afterward. Right now, this is a correction that I don't want to say I saw coming, but I've been kind of preparing for it. So my portfolio is loaded with a lot of value and kind of dialed back on a lot of growthier names. So now I'm like, okay, whatever, it's fine. It'll come back. They're a profitable company. They have cash flow. They can buy back shares. I'm not worried, you know.
Before we continue to Carlos, can you put in the link if someone's coming on?
The StreamYard? Oh, yeah, I'll do that.
Yeah, if you're doing that. So if anyone has a question and they want to come on.
I think.
Carlos, go ahead.
Are you done, Chris?
Yeah.
I think I've been saying since May and June that I felt like we were going to get a rug pull. Now, I don't know if this is the rug pull. I don't know if this is it. But I do know that I think there's more negative catalysts than positive catalysts in our horizon. And I think that in order to continue to have the soft landing, we need to kind of have a magic bullet of a couple of things, right? Macro things, as well as each of the companies' earnings need to do what they got to do. And we also need to get good guidance. So I've been positioning myself, like even when we talked about Disney yesterday, more on just buying longer call options to maximize my my exposure, but minimizing my overall allocation. And I'm more in options now than I typically am for that reason. And then keeping some money on the side. So like, I mean, Enphase at $140, guys. It's like I had a whole debate with someone today about it. Someone wrote me and Vitaly, should I buy Enphase at these prices? And I'm just like, if you're not buying it at 140, you're never going to buy it. It's like, what do you know what I'm saying? It's like we are seeing some great deals right here, and I think the fear that there's going to be a bigger rug pull is keeping people gun shy from buying what they know are good deals right now. And so I'm just trying to take advantage of that as much as I can while still having liquidity and being financially responsible.
So if I'm going to go, I agree with Carlos in terms of obviously some stocks like Enphase are almost, I could even say no brainers at this point. And we've been talking about this for a year, Carlos, that remember the chart says, and I think we've showed this here, 130 is possible. Okay, we're close to
117. I mean, 117.
117, right. 117 is the next level after 130. Okay,
Yeah.
fine, that's possible. But where do people expect this to go? Like, so we do
Kelly's saying 130. My buy order is set at 130. It's like a $10 difference. You might
no, but even if it's a
it runs up to
$20 difference. So
170.
like, okay, so I think of it this way, and I've just been DCA. You've seen my buys. It's on the Discord. Anyone could check them out. I've been buying, even today, I bought I did another synthetic call, which is selling a put and buying a leap, basically 2025. So my point is that at this point, I'm literally stealing money from the market, as Jeremy likes to put it. Because like you can sell these puts, and I'm not telling other people to do it. I'm doing it. Okay. Other people cannot follow. This is not financial advice. Literally, that stock has to go under $100 for me to get these shares. Like, this is how bad it has to get. The world does have to fall apart. The macro has to fall apart. There is no soft landing. Everything tumbles. Rates will never go down. Solar is not a real thing. Like, all of these have to play out within 2 years. That, possible. Of course it's possible, but not to just DCA into like what I just think are quality companies. I think it's lunacy. So when I look at the market today, all I did in the morning was, I saw this was down. I did whatever I had to do. And then I went outside and spent the day installing lights around my pool, which I think is more important than watching the market fluctuate, because I'm not selling anything. And like Chris might not agree with my portfolio, everything, but I do think I high-classed my portfolio over the last couple of years. Okay. I am heavy into Enphase, Tesla, Google, Meta. Like, I am in the big tech. All right, let's put it this way. So they can fluctuate. They can go down 10%. They could go down 20%. I was never in those things for 20% gains.
But see, mine and your portfolio is not that dissimilar. I mean, I have very similar holdings. Meta, like we both share Meta. We both share PayPal.
Amazon, Google,
we both share Google,
PayPal.
Amazon. So that's the thing. These are all high class companies that you don't have to worry about going bankrupt. Like, their business models will will carry them way past this recession. The ones that you have to worry about are the Palantirs of the world, the companies that are. See,
This I agree.
I was waiting for Amit to say something, but he didn't say anything.
No, but
I
you're
heard
bringing
it. I just,
you're bringing
have
up
no
a valid
thoughts on it,
point.
so I didn't
You're
say
bringing up a
anything.
valid point. Like I have a little bit of Enovix still. I kept actually, I think 30% or so, and I sold a little bit. I think a week ago. In either case, that I am worried about in terms of like I think that should go down, right, or will go down. But once again, it's such a small amount of my portfolio. I'm not going to monitor it. It's already there. The market has paid for it. I'm going to keep it. But you're right, Chris. If everybody has 90% in SoFi, I think that's dangerous. I don't think that's high class in your portfolio. It might do well over the long term, but still, it's still a dangerous position to be in.
Well, there's one last caveat because I know that some people are like, well, Palantir's not going bankrupt. That's absolutely true. I'm kidding about that. That was just to get a rouse out of Amit. So maybe the joke didn't land as clearly as it should have. But what I mean is
rubbing
companies
off on you today.
Yeah.
What I
mean is
90% of SoFi, by the way, not SoFi is dangerous. Having 90% of a portfolio in one stock, that's the danger.
What I mean is companies have had extensive run-ups without any fundamental news backing it. Those are the ones you want to watch out for, because right now you've got companies that in the last 6 months have ridden up 300, 400, 500%. And the backdrop is that there's no news other than just people chasing it going forward. At least with Google, you can say, oh, look, their revenue has gone up. Their cash flow has gone up. Their operating margins are higher. Amazon has done the same thing. They're cutting on CapEx. There's no fundamental story behind some of these other companies. And because there's no fundamental story, they're the most susceptible to taking 50, 60% drawdowns from their current price. And to get back to where you are in terms of your gains, it's going to take you literally like 100% to the upside. And you may not get that upside for another 5 years. You never know. That's the other problem too. So I think right now, if you have companies that are a lot more speculative, that are relying on future growth prospects, those are the ones you kind of want to be a little bit more cautious of. For us, it's Enovix. For other people, it might be Palantir. So just be on the safe side.
I want to add something for Amit, because Amit recently sold the calls. Remember, Amit, you did that? And then the stock ran up, and we're like, you did the right thing, because you don't have to worry about it. Because now this thing is tanking, and you would have to worry about it. That's the problem. True. Your sister is out of that position, meaning she has her free shares or free calls, and there's no worry. This is why it's important. And this, I 100% agree with Chris. When things run up, take a little bit off. Get that pressure. And this is financial advice, actually. This is the piece of it. We've been giving this same financial advice for a long time. Take the pressure off where you don't have to sell everything. Because the worst thing is when it tanks and you have to sell everything. That's the worst position to be in.
Someone says, I bought Tupperware at 80 cents and it's up to $5 in 2 weeks. I'll cash out in 18 to 24 months. Please, for the love of God.
What the fuck is Tupperware?
I don't know if you guys have been following this, but this has been a meme stock.
Yeah, but it's like, depending on
plastic and all that shit.
Depending,
I would take a little bit off if you're up 400% before you cash out in 2 years.
But this is, look, those meme stocks operate. We don't talk a lot about crypto, but those meme stocks operate a lot like the altcoins. You tell yourself when you buy in, I'm buying it at 12 cents, and if it gets to $1, I'm going to sell out. But then it gets to $1, and then you're like, but if it got to $1, look at the chart. It's good. I mean, I remember when Shiba Inu,
baby.
Remember when Shiba Inu was like the biggest craze? You know, the people were shitting, oh, my Dogecoin, fuck that. It's the new. And you just get this sense that it's never going to go down until it goes down. And so it's unfortunate. Sometimes you got to learn that lesson. But if you made 400% on anything, if you went to work the next day, and said, I'm going to pay you for 4 days worth of work in one day, right? Or if you made 4 times your annual salary, people would, when you put it in context that way, if your house quadrupled in value, if my house quadrupled in value right now, I would be having this chat tomorrow from a hotel room. I'd be out of here.
Shout out to 600 people in the chat. My answer to that is very similar to these guys. I look at my portfolio. I'm like, what is super risky? What is not super risky? And then I make decisions. I'm pretty much in the same place as you guys. I don't have large cap tech. The only really speculative positions are Palantir and SoFi. And Palantir is a 2030 thing, so I don't care if it goes back to 6. And the others are recovery plays. Like
how many positions would you say you have total, and group your options with shares as one?
There's just 5 stocks: TFC, PayPal, Robinhood. And by the way, I'm up 100% on Robinhood. So this decline we're seeing after hours on Robinhood, yeah, it might affect some of the options, but those are not only are there leaps, I'm already up double. So if it comes back down completely, I lose the gain. I'm right back at my
But
initial.
you also on your options, your downside is limited.
It's
You know
very
exactly
limited.
how much you would lose.
Yeah, on Robinhood, I have 5K on Robinhood. So worst case scenario, Robinhood goes to shit. And again, if Robinhood, we didn't talk about Robinhood. We should talk about them in a second. If Robinhood goes back to $8, they're back to $6 billion in cash, $7 billion market cap. And so if that happens again, to me, that's an opportunity. But it's just a question if that's going to happen. Do you guys?
I was popping in and out of the stream when you were live streaming it, and they're gap profitable. I think it's a penny or something, whatever it is.
Yeah, bro, the street expected them to lose 1 cent. They came up with 3 cents a share. Like the quarter was fine.
That's fine. But what was interesting, and I'm surprised you didn't say anything about it, was he did the one question from retail, because my God, the retail questions were awful on that call. But the one question when they were asking about AI, and he was saying the way that he worded it was unique with his answer about it. He said something about he didn't say like we're using AI to make better products, but he said for people that want to invest in AI, like Robinhood's going to be a good play. Anyway, it got me thinking. He could have just misspoke, but it got me thinking about like, is there a possibility that they can invent a service where you have an AI financial advisor?
Yes, I don't know how legal it is though.
Like imagine that. Think about it like this. Like, and I started researching this, and there's a couple of companies that are already touting using AI as part of financial advising.
A lot of guys are trying to do
and you can go to ChatGPT now and kind of ask it financial information. So in the same way that you have text to video or text to image, you could say text to portfolio management, right? Where you could say, I'm looking for this. I'm looking for this. This is my risk profile. This is my allocation. These are my expected
The problem
returns.
is if Robinhood says, hey, based on our AI estimations, Disney is good right now, and then Disney tanks, I feel like you're going to have such a negative sentiment towards this app that told you to buy something. Because right now, people already have a negative sentiment to Robinhood if they're red. They just hate looking at the app. Well, imagine the thing told you to pick the stock that ended up going down, and now you're red because of the
what
app.
They would do is, how I could see it working is they basically a series of prompts. And look, I'm just completely speculating right now, but they give you a series of prompts. So they would say, based on my calculations, it's like an options. Have you ever looked at an options calculator? Where like you put in the options and it'll give you like a heat map and let you know what are the chances that you're going to make. So this trade has a 39% chance of whatever. Do you want to continue? Yes or no? So it's almost like not that they're actually investing the money for you, but they're giving you the options, all the probabilities, and then you basically using a text prompt, you say yes or no. And they could offer that as a service.
Yeah, no, that's fair. I think they could definitely try.
Just wondering about that.
It would definitely help engagement for sure.
Yeah, like chatbots. A bunch of these already have chatbots, or like even it's terrible, but like Erica on Bank of America. You can, it's terrible. It's like having a conversation with a toddler. But the idea is like now a lot of these companies are getting you more used to speaking with AI for general.
It's like, Erica, why don't you listen to me? You're not doing
Erica,
anything.
where did my money go?
You're not doing anything I asked. All right, you want to bring up a question, or if there is one?
No, we don't have anyone in the back.
Oh, nobody wants to.
Nobody wants to come on. There's so many people that want to, but they never do.
I know, this is kind of crazy.
I'll stream one more time if anyone wants to join. Chris, how about you answer this question in the meantime? Why do you think?
Well, hold on. 600 people. There's 99 likes. What is going on here?
Yes, please like the stream. Why do you consider Palantir speculative if they're a profitable company leading the AI space? Chris, go ahead.
So leading the AI space according to management, but their growth rate is what, 12, 13%, maybe 15%, I think last time. Real great growth rate, So yeah, I think sometimes people are too into what management is saying and not paying attention to the numbers. Let the numbers do the dictating. Let management do the bullshitting. That's how I feel about Palantir right now. Palantir, yes, they're profitable because they have $3 billion on their accounts and they have short-term treasury holdings, which gives them the ability to be gap profitable. In terms of business, they're not outperforming anything right now. So as much as they want to say that they're the greatest company on the planet right now and that their market potential is the world, yeah, go ahead, show us the numbers. I'll believe it after earnings.
When are the earnings? Isn't that
August 7th?
Next August 7th. Okay.
Yeah. So if no one's joining, the last thing we could talk about is Unity.
We're trying to get Joshua. No, Joshua. Someone said that they wanted to, but they're not yet. Jay Sash wants to join, but I am shy. 455.
Oh, we got someone. All right. Rio Weber, you are up. Can you hear us?
Hey, man.
You're muted. Oh, he's going to take it. Bro, that beard is phenomenal. It's a great beard. beard, mustache, everything.
I'm muted, but I said he must be combing. Beard oil. I tried that once. I bought beard oil. I tried to grow a beard. I couldn't do it. It was this
He
is
looks
it.
a lot
This
like
is
my
all I
old
get.
my old personal trainer. He looks just like him, but with a beard. No one, we can't hear you, Rio.
So this podcast just
Okay, next time you join, make sure you got
finance
the mic on,
junkies
ready to
credit
go.
All
rating has gone
I
down.
meant
There
to
you
you
go.
screen
There we go.
anybody.
What's up?
Hey guys, it's nice to finally see you guys in person. We're watching you guys for quite a while.
Hey Rio.
From the shadows.
When did you start watching the pod?
Oh God, maybe almost a year ago now.
Oh wow. Okay.
What Amit really wants to know is
You
why
mean
do
Amit's
like,
pod?
why do you,
Not
why do
this
you
pod,
like him?
right? We haven't
Why do you
been
like
on here.
Amit?
Yeah, no, it's
You gotta
mostly
say
Amit.
something nice about
Yeah.
Amit.
Mostly Amit.
Oh, so you're a Palantir investor, I'm assuming. Rio.
You're a Palantir bag holder. Got it.
I'm the one that messaged you yesterday about
Did we
potentially making
talk
free
on?
content.
I might have. Did you message me to send you the report, the Dan Ives thing?
No.
I think we
long
talking about
story.
messaging on Twitter, not DMs. You just mean like messaging on Twitter. Okay, that's fine.
All right, you
What's your
guys can
question?
catch up after the show. Come on.
Yeah, we got 5
Yeah.
minutes.
So I had a question for Chris.
Go for it.
All right, see you guys later. Bye.
So TFC, I know that you're pretty big on them. I'm curious if you know what happened. Let's see, around March 7th to the 10th or so, that somewhere in there. Why the stock fell off a cliff right in there?
You talking about in
Pretty much
2023?
Yeah.
Pretty much every regional bank took a hit. You had a lot of exposure to some credit events that basically Silicon Valley Bank, FRC, all of them had a ton of risk on their balance sheet. They issued a lot of loans that were pretty much low yielding loans, and as interest rates climbed, those low yielding loans impacted SVB and FRC significantly. So then everyone started to say, well, what about the other regional banks? And that's when people were afraid that there were going to be runs on the regional banks. TFC, which is Truist Financial, is not necessarily a regional bank, because there's something called a super regional. Essentially, the reason why they fell is because they got lopped in with everyone else. The other thing is they have a lot of exposure to consumer credit, which means that if any defaults were happening, anything, they would be one of the people that would end up taking some big hits in terms of credit delinquencies. So they do have a lot of personal loans and like home loans and everything else on their balance sheet.
Yeah.
And most of those are negative yielding technically based on what the federal interest rate is right now. So if you take the same dollar right now, you lend it to the Fed in a short-term treasury basis, you could get 5.5% or 550 basis points of return, versus a mortgage. If you're holding it on your balance sheet, that's like yielding 3% or 3.25%. You're essentially not capturing that spread. So that's pretty much their biggest vulnerability. But they have a lot of other areas of revenue that they generate money that's coming from non-interest income. They have insurance holdings that are generating them money. So they can make up for the difference very easily and just warehouse those loans on their balance sheet for a prolonged period of time. And eventually that money comes back to them anyway, because as you pay your mortgage, that money, the interest comes in, and that part of that principal comes back in. There hasn't been nearly as much depositor flight as other banks have had to face. So a lot of people have said, you know what, maybe the regional banking issues are going to have trouble. And then one other headwind is that because of what happened to FRC and SVB, there's talks of the Federal Reserve, the Fed basically and the federal government putting in legislation around how much additional capital is going to have to be held by banks in order to maintain liquidity requirements, so that just in case in the future, if there is a run on the bank, the Fed doesn't have to come in and bail them out by giving them loans, which is essentially what the Fed did. The Fed provided them short-term liquidity by basically using their existing loans, like MBS products, as collateral, and gave them loans so that this way there's cash on the balance sheet just in case there was any runs. So that's about it.
Do you bank
you-
with them yourself?
Can you just bring up the
I
the
do
chart again, real
not.
Okay, I do.
I don't.
They're my primary
Yeah.
bank, actually.
Yeah.
One thing, Chris, I'd never noticed that there was this many gaps actually when in the downturn. Look at this gap here. There's a
Yeah.
gap here between 30, 34, 30. So that's the quote of the podcast.
Well, the thing is, there when the market's irrational, people will do selling. They'll sell great businesses and great companies, with indiscriminately, and that's what it
But
is. This
but the idea of like if you believe that those gaps would need to be filled, these are this one here is you got 1, 2, maybe you can count these 3 little gaps that need to be filled between 34 and what is that 38, and then another one at 39 to like 41, and then a tiny one here at like $42. So at some point we have to go back and fill in those.
Yeah, I think as the economic conditions improve, people realize that regional banking is a profitable business. They'll go back to being what they were anyway.
So follow. How correlated do you think the housing market is to the performance of TFC?
Not much, because they're a lot more diversified than other banks are. They have a lot of revenue coming in from a lot of different sources. So there's a big difference between someone who's primarily their business is in one single category, where you have to worry about that one industry. If it dies down or if origination stop, that they'll go out of business. With TFC, they have a very diversified portfolio of loans. Like I said, they've got auto loans, personal loans, loans to small business, loans to regional lenders. They've got commercial assets like strip malls that lend to. They're not like a small time bank that's just focuses on one niche category or one niche amount of people. They're heavily diversified.
Can you bring up Michael Wilder's comment? It's actually for you, Rio. He's asking, why do you like banking with them versus your other options? Just curious.
It's not so much that I like banking with them. I actually was part of BB&T before they were purchased by Truist. And the interface that BB&T had, all of the consumer-facing side, at least I know for sure, is what Truist took over and started using for their own for everything. Because BB&T had a really, really great consumer-facing interface.
Yeah.
Do you own their stock, Rio? Is that why you're curious about it? Or?
Chris has convinced me to buy very long calls on them, just slightly out of the money. So I like the company. I really do. I like the banking.
I'll be honest. If you're up on those positions, I would rather own the stock rather than the options. And I'll tell you the reason why, because you don't know what the credit conditions are going to be like for the next 6 to 12 months. Yes, I'm hoping that it reverts back to its mean again and it goes back to its 45, but I would rather be in the stock and collect dividends while I'm waiting for the things to eventually happen.
Interesting. Okay.
That's one of those things that, like, you're getting a very healthy dividend, especially if you picked it up in the 25s. You're getting an 8.5% dividend, which is probably going to be going up next quarter or next year. So I would rather own the stock in TFC rather than the options.
Interesting. Okay. That's
Unless you're doing a spread, which I sold out of because I had juiced that up, and I like I said, I'm more worried about the credit conditions on a macro level, and if I've already had a nice 200% gain, I'm going to take it and relax, or 100% gain and relax. Yeah.
Part of the reason I bought them is because the leverage that you can get out of a call in at least TFC, it's actually pretty decent. I'm sure you guys follow Jesse Dow. That guy's freaking everywhere. He's probably watching right now. He's just everywhere.
This guy's
He
making a name for himself.
showered the chat yesterday with subscriptions.
Yeah, he seems to do that every once in a while.
He's a good guy.
Anyway, yeah, he's the one that turned me on to the idea that you should buy options with because if you look at NVIDIA options, the stock price can fluctuate by $100 and you're going to make basically nothing. It's crazy how little you get.
Yeah, because the underlying asset is up 300%. Yeah.
Yeah, but if it could fall $100 to $300 and you'd basically break even in a year.
Yeah.
That's absolutely crazy.
Yeah.
But yeah, TFC
right.
had a very good call.
I think right now regional banks, for the most part, there was definitely a time to buy call options, but that was earlier in the year when things had fallen apart. Now that things have recovered a pretty good amount, and you're getting closer to reverting back to a point where the margin of safety is not as high, it's time to kind of like take some profits off the table and just buy the stock instead and then ride the stock higher. The banks are still trading below book. They're still trading with a very low PE, but with the macro conditions that we have, you don't want to be in an asset class that you have expiration on and and the value over time is going to deteriorate. You want something with the real value. So like I said, right now, imagine you're just holding TFC, you're going to get a 16% return just based on its dividends in the next year and a half to 2 years. Whereas with the options, yeah, sure, you're leveraging, but you're leveraging something that has to happen rather than just something where you just have the stock. So I would say right now, there was definitely a time where the options were a better play, but right now is not that time. Right now is a good time to just hold on.
Did you buy the options recently, Rio, or months ago?
It was it was last month, something like middle of last month.
What price was the TFC at when you bought the options?
Basically, yeah, what it is now.
What it is right now?
Yeah, it's basically.
Yeah, I got the spreads along with Chris when it was like 26, 27, so it is a little bit different. Yes, I still own the spreads, Josh.
Okay, interesting.
All right.
So you don't seem super confident in the performance of the economy, then, I guess.
Well, but it takes a while to play out. I mean, it takes a while to play out, and banks are susceptible to things like credit ratings and interest rates more so than some of the other stocks. So, but that's why you buy them with such a long term. That's why you pay that premium for that time.
Yeah. Like I said, it's more just on a risk. It's about risk. It's about measuring risk to reward, right? When TFC was trading at $25, the risk to reward was really good because you were risking very little to get a lot of reward because you're waiting for just a recovery back to where it was. Now, the whole thing is a little bit like on the opposite end, right? Where you're actually taking on more risk because the price is actually a lot higher than what it was before. So now you've got to contend with a worsening economy, maybe some delinquencies. Like here's an example of something that I'm keeping my eye on significantly right now, and that's like Ally Financial. Ally is one of the biggest originators of auto loans in the country. And one of the things I've been seeing is their delinquency rates have started to climb up, and their delinquency rates are climbing up pretty fast. So that means a lot of people are not paying for their cars, So if the economy tanks and people lose their jobs, I'm sure that one of the things that they're not going to do is want to make their car payments. And especially if you saw a lot of people took on a lot of risk during the last 2 years because car prices were like astronomical, yet people were for some reason taking all these loans. That's a car is a depreciating asset that even if it just sits in a lot, it's going to depreciate, no matter what you do. So the total value that some of these companies might have to write off can be significant. So, so just got to keep that in mind.
I remember Ally being the one next on chopping block for when the San Francisco bank failed. Everyone was talking about Ally was going to go next.
All right.
I think the one which you're thinking about is Western Alliance and PacWest. But yeah, I mean, there were a whole bunch of people that were on the list, basically. So,
all right, thanks, Rio. Appreciate it.
One thing, just to throw it out there that maybe we should talk about tomorrow is SolarEdge had their earnings and they tanked bad.
They tanked as bad as Enphase?
Bad.
I was thinking we do an episode on that, actually, Carlos.
We could, because look, they had earnings and revenue beats, but they tanked 18%? 18%.
Forward guidance again. But me and you should do that on our channel.
Yeah.
And listen to the earnings and riff on it, basically.
But anyway, it's just going.
Well, it's kind of the same as Enphase. Enphase is down 19%, so it's actually the same. It's not that different.
But still,
I mean, all of solar got fucked.
I am looking into SolarEdge as well right now. I was always waiting for it to hit these prices around 200, 180 to 200, and it's there. So now I'm considering it.
It's McDonald's and Burger King, man. It's like,
I know, it's basically that. Which duopoly do I want to buy today? Okay, I'll buy both.
Yeah. But anyway, I think we should end it off on Big Papa's comment 506. I see way too many people blindly following these content creators into positions, and it scares me for them. And again, as much as we try to reiterate this, the stuff that we talk about is what we would talk about whether or not we were on a YouTube channel, and that it really is important for people to develop their own conviction, because the easiest way to get burned sometimes is when you have someone else's conviction being the reason why you're buying something. And it's hard because, I mean, we enjoy doing this and I love talking with you guys, but I still like make my own decisions. You know, I still live and die by my own decisions, and you guys should too. Because I think the guy made a comment about Chris convincing him to buy.
Well, all
TFC.
we do is present our thesis behind cases of companies and say, look, I think this company is undervalued. I think this company is overvalued. I think this company has the potential to do X. This company has potential to do Y. And sometimes we even discuss what our personal positions are in doing that. But at the end of the day, it's still your responsibility to take prudent action. You know, I would say the best I could do is provide good due diligence on companies. The problem that I always keep running into, and this is one of the reasons why I don't like talking about certain like strategies, is because if people apply them in the wrong way, they can get burned very, very badly.
Mhm.
Like as an example, right, with options, right? Some people said, you know what? I like what Chris is saying. I'm going to buy call options way out of the money. And like, let's say TFC at $60 a share, and they put their entire life savings on it. Now, here's the thing. I said that TFC is a good company. That doesn't mean that you go out there and you take the highest risk possible in trying to determine your future with a company. You know, that's the part that's really hard for people to grasp, which is how are you going to execute that specific play? Like Vitaly can say, look, I think Enphase is a great deal at 150. So some people might say, you know what, I'm going to go buy up and load up on a ton of put options on Enphase. And then, you know, they get assigned all these shares. They could cry about it and say, look, and Vitaly told me that this was going to go to X, Y, and Z, and this happened. No, Vitaly said it was a good company. He shows you the fundamentals. He shows you all the stuff. The way that you execute it is completely on you, how you're going to deal with it, you know. And especially when it comes to options, you have to be 10 times more careful, because if you don't know what you're doing on it, you could get crushed by a multitude of factors, whether that's IV, whether that's deltas, whether that's just a general price that you can get bid and ask price on. So that's one of the reasons why we, you know, like I said, I'm not against talking about options, but I'm also not for advocating options as a strategy. And I hope, Amit, you realize with everything that's going on in the market and you seeing your portfolio, you know, unlike times where things are with stocks, at least when they go down, it's like, oh yeah, it's down 2-3%. I'm sure that your portfolio is drawn down like a 10 to 12% in one
Monday
day.
it was up a lot. Today it was down a lot.
Options.
So,
you know, and so this is one of the double-edged swords of dealing with certain strategies. So you have to really know how to execute strategies when it comes to options. And that's why most people, I would say 99% of people who are investing, unless you know what you're doing, just stick to the stock. That's it. So a lot of people are asking me, Chris, what is a good strike price for the X, Y, and Z? And I don't like telling people for this specific reason, because if you don't know how to execute things, it can turn on you very fast. And also, guys like me, we get out. Like guys like Jesse, we get the fuck out. We don't stay in it for a long haul. Even if it's like, oh, we have a 2-year option. If I see the shit not going my way, I'll sell out of it. Jesse will sell out of it. Jesse did that.
That's why when Chris said a week ago, or on Twitter, he said, I'm going long Disney. Everyone needs to realize long for him means in 2 months, if he sees what he wants, he's out. Long for most people means like 5-10 years. That's not for Chris, not for Jesse, not for people who are more advanced at looking at this stuff.
Yeah.
And so
it's that. Even with that, like I know someone was calling Jesse out on Twitter. It was like, oh, you're not an investor, you're a trader. And Jesse's like, look, man, where I see opportunity, I put money. That's it. Like, you know, you can call me whatever you want. At the end of the day, he's up 600% on his positions. I'm up close to 200% on my positions. You know, does it make me feel bad that you call me a trader? A little bit. But at the end of the day, it is what I am. I am who I am. You know?
There we go. We got the clip. Chris admitted it. We got the clip.
There's
guys.
nothing to feel bad about being a trader, by the way. The only thing is, don't say you're in this for the long haul and you expect some sort of a massive valuation when honestly you don't even have to wait for that. That's the only thing I ever said, because there's certain positions I trade out. NFX I only had for the last 6 months. I'm 2/3 out of it.
But it also depends on the type of trades that you're making. If you're making the types of trades where you expect to see outsized gains in a shorter time period, then you're really not. When we say long-term investment, most of the time you mean I'm in it for big gains, right? And most of the time, the way to get the big gains is by holding a long period of time. But if you have different strategies, like Chris was saying, that some you want to talk publicly or not, If you get the if I'm sorry, if Tesla tripled tomorrow, I'd be out of it. You know what I'm saying? Tomorrow, I'd be out of it. And so there is a certain amount of that too. That the idea of a long-term investor, it's really more about what does that get you on the other end.
Well, yeah, we're waiting for certain price targets, obviously.
That's what it is. That's
If
literally all
Enphase,
it is.
like I keep saying, if Enphase went to around $400, that doesn't sound like a lot, like crazy, but I'm selling a portion of my portfolio because that's my first target. So as soon as I hit that first target, there's going to be a certain portion that goes out the window, and then at 600
How
is
many
another
Enphase shares
portion.
do you have, by the way?
Stop asking that shit. It's so annoying. The thing is, I am getting way more Enphase shares as it goes down, and I am going to hit my target. By the way,
I should have asked you that at the Cheesecake Factory because you were revealing a lot of things to me, but I never asked you how much Enphase do you have. I know the Tesla.
As it tanks, I am going to actually hit the number of shares that I want as it goes down, and that's the beauty of being an actual long-term investor. When something tanks, then you have conviction in it, and it goes down. You're not afraid of buying more. It's when you don't have conviction in it and you're following Chris or me or whoever, and it goes down, you're yelling on Twitter, but you told me it was great. That's not how this works, people.
Yeah. The one thing I do want to quickly just talk about, like on a macro side before we head out, because it's been a
Carlos,
while.
if you got to go, I know you got.
I got to go too. So you guys can wrap it up. I know Chris doesn't have his last word, so see you later. All right, bye.
From a macro perspective, right now, there you go. Thanks. We could see a 10% drawdown from where we are today. All right. One of the things that's been worrying me is this headline CPI number. If you look at this right here, let me pull up the Cleveland Fed.
You're not the only one saying this. I mean, there's a couple people. I mean, even Tom Lee is saying we're probably going to see a dicey August, September.
Yeah, and it's normal part of the business cycle.
Yeah, and I think you weren't here that day. I showed a chart. A guy that I follow like religiously on crypto, the guy Bob Lucas, he follows the 60-day cycles of markets, and we've technically we've extended way too far in terms of how far like the S&P should have run. And so typically these things will correct themselves, but it's going to be fall a lot faster over a shorter period of time. So, I mean, he's saying that when we do have that turn, you can expect like 4 weeks, 4 or 5 weeks of just straight declines, so that we can sort of reset for the next 60 days. He hasn't done me wrong as of yet.
Yeah, so if you look at headline CPI numbers, like from prediction standpoint, from the Cleveland Fed, they do something called nowcasting, where they look at stuff in post real time. According to them, July numbers are going to be close to about 3.42% for headline CPI, and with August, it's going to be 3.92%. So, if you think about it, if we get a number like 3.4% or even close to it, like 3.3%, I think that there's some really big headline risk, and where people think that there's a reacceleration of inflation, and that we're probably going to see further rate hikes, where the bull case has been that we would stop and pause on the rate hike side. That might end up causing the market to really take a big beating over the next couple of weeks. So just saying August drawdown might be in our future, and just to keep an eye on that. The one good thing, though, is that core PCE, which is the number that the Fed really relies on to do its policy planning, is still going down, which is good. It's just that this headline number will end up causing some panic in the market, and sometimes people will sell because of that, and that could be good opportunities to buy. So I think we could see a 10% drawdown, and then after that is a strong second half. So I'm not sure how everyone wants to position their portfolios. Me personally, if I had to give advice, I wouldn't even say I would give advice. If it was me and I had a whole bunch of stocks that I really liked, I would not look at my portfolio for the next 60 days. I would just buy, hold, sell, just relax and be like, okay, you know what? Shit'll go down, shit'll come back up.
I didn't do it. I did that for several years, and it was probably the best out of returns, the best years of returns that I've had, was just putting 5,000 or 10,000 into a stock and then ignore it. I dare you to do that. You know what I mean?
Yeah.
Put 5 or 10,000 into a stock and literally ignore it for 5 years.
Yeah, I think the hardest part is going to be trying to time it, being like, you know what, I'm going to buy a whole bunch of put options on the QQQ, or I'm gonna try to play this using a triple edge option, bro. I don't know anyone there's people out there that have probably been able to successfully time their entries and exits out of those kinds of positions, but I'm not one of them. All I know is right now I'm sitting on a very high class portfolio. I've got some cash on the side just in case some really good opportunities come about. But other than that, I'm just chilling. I'm not really looking to buy anything at this point.
Mhm.
I am looking to add some stuff, add to some of my positions, primarily Disney, which I think is very undervalued
When
for
do
where
we
they're
do
headed.
the episode on Disney? Is it Sunday? Do you want to do Sunday?
You know, I'll probably think, yeah, I think maybe Sunday. I think Sunday would be good, or next week, Monday before earnings, primarily because like I have a lot of due diligence on Disney. Like I have a lot, but I want to make sure that I'm presenting it to the Patreon folk that I've got. They really, like, a lot of people stepped up to the Patreon, so I want to make sure that they get a first crack at all that information, that they can digest it. If they have any questions, I can answer it to them one on one. It'll give me some confidence in my thesis, because some people will probably probe me for some answers. And when I do my presentation with you guys, you'll know, like, hey, it's coming from a source that's been, pretty heavily
Vetted.
what is that word? Vetted. Well, I wouldn't say vetted. Vetted is probably, but questioned basically. So yeah, I think I'll give you a quick sneak peek at what my thesis around Disney is. It's primarily recovery, but it's a transition from a linear model to a DTC model. And the one chart that a lot of people don't appreciate, give me 1 second to show everyone.
Chris says so. The Discord is the lab rats. That's hilarious. No, they're the guys who get privileged to get it first. So if you want it, Chris's Patreon is in the description. $5 a month. You can subscribe and get the DD before everybody else.
Okay, hold on 1 second. Share screen. So, man, I have so many freaking tabs open right now. It's all right. Share this screen real quick. Okay, can everyone see my screen?
Yeah.
Okay, good. So this right here, this actually is older data, but basically, if you look at here, how many paid subscribers does Netflix and Disney have? Netflix started almost 13 years ago, and basically they have been steadily, on the steady decline right now. I mean, steady incline, where they've actually been, gaining users. This right here is Disney. Disney Plus jumped up. Hulu is still gaining subscribers and is going up. ESPN Plus is going up. But if you look at the total market cap of Disney right now, Disney's market cap is about $157 billion versus Netflix market cap $190 billion, right? So Netflix is worth more than Disney, and Disney has very similar streaming numbers. Now, from an operating cash flow perspective, Netflix right now looks like the clear winner, but there's a lot more to those numbers than people would believe. And that Disney's a much more diversified company. They have a lot of revenue sources. They have a lot of operating income. There's a lot of levers that Disney can pull to get back to a very, very good multiple. And their operating cash flows can grow significantly. So I would say it's a good idea to look at Disney. When you compare it to Netflix, you'll get a much better idea of where things can go. And maybe I'll ask Carlos to probably elaborate a little bit on the content side of things, because Carlos could probably speak about what the total profitability of some content really is, because content is not as simple as you produce it, you show it, you monetize it, and then you lose it forever. Some of these things, they go in perpetuity, so
there's
like
that side there's that side of it,
Yeah.
but I'm also on the finishing end of it. Like, most of the budget is not spent in the shooting of these things. Most of it is spent in the post-production, which is where I'm at.
Yeah.
And because of that, and because of the length of time that these projects go on, there's a lot of places that you can cut fat. And there's also efficiencies that you can gain. We talked a little bit about this, like with The Mandalorian. First season costs a bunch of money because you got to build out a bunch of these studios, but then every subsequent season you use the same gear over and over and over again. You have all these your CGI teams that have already built out all the backgrounds, all of everything, and these shows get cheaper and cheaper to produce over the cost of several years. So even though Disney Plus is a relatively new venture, at least for a lot of their for the original content, the cost of producing those same shows gets cheaper and cheaper and cheaper over years. Plus, they can negotiate contracts with people, right, for several years and lock in certain pricing. So, but I do got a jet, and it's good to see you again, brother. And
we'll end the pod here. We'll end the pod
keep
here.
chatting,
Yep.
and I'll see you guys tomorrow on WhatsApp.
Yep.
All right,
I'll see you
everybody.
guys.
See you tomorrow.
Take care.
Have a good one. Good night,
Bye, guys.
everybody.